What if a single digit mistyped by an anonymous clerk could quietly drain over $100,000 from your future net worth without you ever realizing it? Imagine standing at the absolute finish line of purchasing your dream home, only to discover your mortgage rate has suddenly jumped by 1.5%. You did absolutely nothing wrong, never missed a single payment, and kept your credit utilization exceptionally low throughout the entire year. Yet, an administrative error on your credit report instantly drags your credit score down right before your bank pulls your official profile. Most people assume a minor reporting mistake is just a temporary paperwork headache that can be resolved with a quick phone call. But that seemingly minor 1.5% rate increase actually costs you more than $100,000 in extra interest over a standard 30-year mortgage. Today, we expose the hidden, systemic waiting game designed by massive credit bureaus to exploit your natural psychological exhaustion. They count on you giving up, accepting the higher interest rate, and paying this entirely invisible credit tax straight to financial institutions. To understand how this profitable barrier operates, we must examine the business model of the three major credit bureaus. These bureaus do not work for you, nor do they view individual consumers as their primary paying customers. Your personal payment history is the highly valuable product they harvest, package, and sell directly to massive marketing and financial firms. When an error inevitably occurs, the entire resolution apparatus is engineered to leverage your cognitive fatigue and behavioral biases. Instead of human investigators, the bureaus utilize a highly automated scanning system known globally as e-Oscar. This automated software takes your carefully written explanation and reduces complex human disputes into simple, cold, two-digit codes. These simplified codes are then outsourced to high-speed processing centers, where workers spend less than 4 minutes per file. Because these overseas processors are evaluated entirely on speed, the easiest path of resistance is issuing systemic, automated rejections. The entire dispute architecture functions like an endless bureaucratic hamster wheel, specifically designed to drain your psychological resolve. Artificial delays, endless identity verification loops, and generic letters are strategically dragged out as your closing date approaches. The bureaus gamble on the fact that your brain will naturally choose the status quo of accepting an expensive loan. They know you would rather pay a lifelong financial penalty than risk losing your dream house during their slow verification cycle. Understanding this calculated setup is the first step toward reclaiming absolute control over your personal financial destiny. If you want to protect your hard-earned wealth from these invisible financial barriers, subscribe to Economecha right now. By subscribing today, you will continuously upgrade your financial intelligence and stay far ahead of systemic modern capitalistic setups. Equipped with the right knowledge, you can transform from a passive victim of bureaucratic delays into an active legal force. To witness the jaw-dropping long-term cost of these two paths, let us run a direct comparison of two identical households. To understand this invisible credit tax in action, let us look at two households buying the exact same $400,000 home. Both Household A and Household B discover a small administrative error on their credit reports right before their final loan closing. Household A attempts to call the credit bureaus, but quickly gets trapped in their complicated automated voice response system. Feeling overwhelmed by cognitive fatigue and facing an urgent closing deadline, they simply give in and accept a 7.5% interest rate. Household B discovers the exact same mistake, but refuses to let the bureaus dictate their financial future through administrative delays. They immediately utilize their consumer protection rights to force an accelerated verification, securing their original 6% mortgage rate. The initial difference of 1.5% might look minor on paper, but the long-term mathematical reality is absolutely devastating. Over the first 10-year period, Household A pays a shocking $41,200 more in pure interest than Household B. That is $41,200 of hard-earned household wealth completely erased by systemic corporate friction and a single administrative mistake. This proves that the system does not just test your patience, it actively taxes your psychological fatigue to extract massive profits. But you do not have to accept these asymmetric rules when you hold the ultimate legal keys to dismantle their delays. To beat the credit bureaus at their own calculated game, you must execute the triple threat certified dispute protocol. First, bypass the credit bureau's online dispute portals entirely, because their digital terms of service often strip your consumer rights. These digital platforms are designed to force you into generic checkboxes that destroy your ability to present detailed physical evidence. By submitting your dispute online, you may unknowingly waive your statutory right to bring a lawsuit under the Fair Credit Reporting Act. Second, print out your physical dispute letters and send them exclusively via certified mail with return receipt requested. This physical paper trail creates an undeniable, legally binding receipt that officially triggers a strict, mandatory 30-day investigation window. If the credit bureau fails to verify the disputed record within those 30 days, they are legally required to delete it. Third, copy the Consumer Financial Protection Bureau, or CFPB, directly on every single piece of correspondence you send. When credit bureaus see a federal regulatory agency copied on your dispute, your file is immediately prioritized to avoid heavy fines. The secret to winning this economic battle is starting the correction process long before you ever apply for a major loan. Do not wait until you are standing at the closing table. Go to annualcreditreport.com tomorrow morning to download your profiles. Pull your official files from all 3 major bureaus, inspect every line item, and look for any tiny administrative errors. Initiate this precise, paper-based dispute process immediately to reclaim your hard-earned financial security and keep your interest rates low. By mastering these behavioral loops and systemic rules, you ensure that your money stays exactly where it belongs, in your pocket.